在全球经济与治理环境快速变迁之下，尽职治理正面临许多的新兴挑战。接下来，我们非常荣幸邀请到亚洲公司治理协会秘书长 Amargil 先生，为我们分享尽职治理的新兴挑战与2025年展望。We're honored to invite Mr. Amargil, Secretary General of the Asian Corporate Governance Association, to share his insights on stewardship, emerging challenges, and outlook for 2025. Please give a warm welcome to Mr. Amargil to the stage. Welcome!
Thank you. Good morning. I'd like to thank TWSE, TDCC for inviting us to share some thoughts and some views from Asian Corporate Governance Association. But I also like to congratulate TDCC and TWSE for putting as much emphasis on stewardship in the discussion that we are having today. Because, you know, I've put my key points here in case I ramble too much and in case I run out of time. The key points I'd like to make are here on the first page. But essentially, in my view, and members of ACGA, stewardship is the key missing link for corporate governance to advance to the next level. Just as for companies, we look for boards to have independent directors, competent, effective directors, but to have meaningful discussions for corporate governance to move beyond compliance. It's not just rules and regulations. It's not just having 1/3 independent directors and half or independent chair, etc. But you need discussions. Discussions between the board, independent directors, as well as other directors, with investors. So the other side from having independent directors is asset managers need to have stewardship teams. Asset managers need to be having the meetings to discuss corporate governance with corporates. Otherwise, it is all compliance. And it has been compliance mentality relating to corporate governance in most of our markets in Asia for the last 20 or 30 years. That is beginning to change. And I would congratulate TWSE, TDCC for putting as much emphasis on stewardship. And I would like to make some of my points here. So, as the key point is that stewardship is really the missing link to advance corporate governance, but stewardship resourcing is very low globally as well as in Asia, and we have some statistics for that. There is an important part for investors to play to advance corporate governance in the markets. We do a rating of markets across 12 Asia-Pacific markets from Japan to Australia and Asia ex-Japan. Taiwan is somewhere in the middle in terms of how it scores on institutional investors pushing on corporate governance. Interestingly, retail investors, we also score for retail investors and what they're doing, Taiwan is one of the highest. And I think that is partly the efforts of SFIPC. Talk a little bit about developments and going forward in 2025. Obviously, there is a bit of a backlash against DEI and ESG. But in terms of the support that they're getting from investors, it's interesting to see that even in the US, anti-DEI proposals are not getting a lot of support when it comes to shareholder meetings, at least in the last 12 months. In Asia, there is good momentum on sustainability reporting, good momentum on diversity. We're seeing more women moving up the corporate ladder to senior positions, and on boards as well, diversity is increasing. A remarkable development in Asia over the last 5 years or so is growing activism. And it's interesting that in 2024, APAC overtook Europe for shareholder proposals targeting companies, proposals coming from shareholders. APAC is now ahead of Europe. Access to independent directors is still a challenge, but it's crucial for the discussions between stewardship teams and to understand how boards actually work. Stewardship codes come back to this old chestnut if you like. Stewardship codes are getting involved. There are new editions of stewardship codes. Japan has just put out a consultation to revise its stewardship code. We would emphasize that stewardship codes need to put more emphasis on outcomes, not just motions, not just how many meetings did a particular firm vote on, how many vote against, broad rationale, very generic rationale when they're voting for or against. That has to move beyond the motions to real substance, and I'll talk a little bit about that. I think asset owners have a big role to play in pushing the stewardship efforts in any particular market. So at the end of last year, October last year, we came out with a report called Activating Asia. It focuses on investors as well as corporates in how they're pushing corporate governance in the markets. And that is because we have 7 categories that I show here on the left, 7 categories and how we rate the markets on each of these categories. And this is the average score across the markets. So markets do well in terms of audit practices. Markets do well in terms of CG rules and regulators, etc. But the category where markets markets fare the lowest in our rating is investors. The score for investors across the region, particularly almost each market, when we look at what we're seeing in rating markets for how much investors are pushing corporate governance, it is the lowest scoring. And that was the same in 2020, our previous scoring, as it was at the end of 2023 when we did our last scoring. What we find here, if you look at the change in score on the markets that we did from 2020 to 2023, the red line is the change in our score for investors, and what investors are doing to push better governance, and the bar is our overall market score and the change in score from 2020 to 2023. And what you see is that the markets with the biggest advance in overall market CG score are also markets where the score for investors, what investors are doing, has also seen the biggest improvement. And on the other side, the markets with the lowest, with the biggest decline in overall CG score for the market by our ratings are also the markets with the decline in our score for what investors are doing. So, as everyone would say, correlation, not always causation, but I would say that this does represent that investors have an important role to play, because from the corporate side, the typical senior managers, the CEOs, the board members, they will look and say, okay, regulators want us to do this. Well, we'll try, we'll do our best, we'll, in 1/3 independent committees and so on. But unless they hear investors saying, this is important, the companies won't take it seriously. And that is why investors need to step up. So in terms of our scoring on investors, the markets that score highest, Australia, Japan, Korea. Markets that score the lowest, Indonesia, mainland China, Philippines, and Taiwan is somewhere in the middle. When you look at the score, and we break out our scoring for what institutional investors are doing, that's the bulk of the scoring. We have 17 questions, 17 criteria for what investors are doing. And of the 17, basically 12 are on institutional investors, 4 are what retail investors are doing, and we've got one last question, which is whether there's a proxy advisor active in the market. And so, as I mentioned, Taiwan is roughly in the middle, but on retail investors, Taiwan is one of the top. One of the top, neck to neck with Singapore, and just slightly below our score for Australia. And that's because we think what SFIPC does is very, very meaningful in representing retail investors and representing investors overall to make sure that companies are not disadvantaging investors. So our scores on investors, and this is again average for the region, but Taiwan is not too different. The scores that we have across the markets, investors do well in terms of foreign investors and domestic investors voting at AGMs, providing rationale, and voting against. But in terms of providing the rationale, disclosing the votes at company level and reasons against, the score is much lower. And partly it's because quite often the rationale that's provided is very generic, that we consider it to be, investors will say, we voted against or we voted for because we consider it to be best interest of the company. So the granularity and the real explanation of votes, we would put it way below the amount of voting that we're seeing. And then the lowest scoring that we're finding across the markets is AGM participation by investors. There are all sorts of institutional reasons. There are also structural reasons, I should say. Quite often AGMs are very concentrated. It's difficult for investors to go physically. But essentially, we're finding participation of investors in AGMs quite low. Activist funds beginning to pick up in Asia, but still not quite a feature in most of the markets. And asset owner leadership is something that is beginning to improve, but is still on the lowest scoring of the criteria. So that's kind of like the backdrop. And then we've got some of the charts on the outlook going forward. Obviously, there's a backlash right now with regard to DEI and ESG issues. And if you look at the Russell 3000, which is the broadest index, 3,000 companies in the US, in the last 3 years, between 2001 to 2024, the number of anti-ESG proposals seen by Russell 3000 companies has more than quadrupled, from about 23 to 112. And also the number of DEI proposals from a very low base, the number of DEI proposals is also, anti-DEI proposals has also increased from 1 to 13. But the support that they've got from shareholders is still less than 2%. And we are still seeing a lot of large asset owners and some of the asset managers saying they're committed to DEI, and that includes asset owners like the New York City pension funds, CalSTRS, and so on. In Europe, there is generally more commitment and priority still given on sustainability issues, but there has been a change in regulations that we should acknowledge. There's this omnibus package of reporting on sustainability, and a couple of months ago, they increased the threshold of company size in terms of how many employees, revenue, and asset size. The threshold got raised so that the number of companies that need to report got reduced. And essentially now, about 80% of the companies that earlier had to report would now not have to report on sustainability in Europe. Having said that, although it's a large number of companies that don't have to report, these are the much, much smaller companies. And so the 20% of companies that still have to report almost certainly account for 80% or more of the emissions from Europe. In Asia, as I mentioned, we see diversity statistics improving. When you look at women on boards, statistics across the region, even Japan and Korea, which have traditionally been markets where female participation on boards has been very low, even those markets have seen improvement, and Southeast Asian markets like Singapore and my home country, Malaysia. Taiwan has always been one of the highest in terms of female representation and continues to be one of the highest on board diversity. Sustainability reporting, ISSB rollout in the next 2 or 3 years, you're going to get across most of the markets in Asia, IFRS 1, IFRS 2, ISSB 1, ISSB 2 coming into effect. The big question is whether the reporting is going to be comparable from one market to another, whether you have assurance that is comparable from one market to another. And again here, I would congratulate Taiwan and the regulators in Taiwan for emphasizing and requiring third-party assurance, which we're not seeing in a lot of other markets in the region. The last aspect here that I'm mentioning is shareholder value, which is regulators putting emphasis on company boards to be looking at capital management, at ROE, and improving, essentially, shareholder returns. And Japan came out with their action plan 2 years ago, and that is gaining momentum. One of the reasons why asset allocators are increasing their allocations to Japan. Korea last year came out with their value up and then their boost up. All sorts of political issues in Korea right now, but it's also come up with a program. Taiwan has the voluntary program on enhancing shareholder market value for companies. And similarly, CSRC from Beijing have also come out with guidelines requiring the boards to be looking at market value. And we're seeing it also, some plans in the pipeline in markets like Thailand and Malaysia. I would say this is a very, very important development, that the aspect of corporate governance being more than just compliance, but the board responsibility, the fiduciary responsibility that directors have to all shareholders is not just to ensure that the rules and regulations are met, but also to ensure that the company's strategy and execution of strategy delivers shareholder value. And that mindset, moving away from compliance to shareholder value, which is now being emphasized and encouraged by regulators across the region, I think is a very positive development. Shareholder activism on the rise, and significant increase, particularly in Japan and to some extent in Korea, on activists having campaigns on companies. Last year, Japan became the second largest market for activist proposals. And in Korea, we're seeing more activists within Korea and outside Korea launching campaigns for shareholder value. And as I said, APAC has now overtaken Europe for a number of shareholder activist campaigns. Engaging directors is probably the biggest issue that stewardship teams have. And I'm sure for all of those here representing asset managers, when you try to meet with independent directors, all sorts of obstacles and challenges are put up. But obviously, it is key to have something like a lead independent director, whether de facto or de jure, someone officially in that position, someone unofficially in that position. It is important to have an understanding from an independent director how the board functions. Otherwise, it could all be just very superficial. And the momentum towards lead independent directors, still a little bit slow, still an area for progress in the markets. Resourcing in stewardship, the point I was making at the beginning. Various consultants and a report as well by PRI and Thinking Ahead Institute. They surveyed 49 asset managers and 20 asset owners, so about 70 all in all. And they find that in terms of total headcount, the headcount allocated to stewardship is only 7%. And that is among the sample that they looked at. If they estimate that a broader universe of asset managers and asset owners, only about 5% of headcount is focused on stewardship. And for the value that stewardship can bring in terms of long-term shareholder returns, this is obviously too low. There was a consultancy report by Reddington in the US at the end of 2023. They looked at 127 asset managers. 45% of the asset managers that they looked at in the US had no headcount for stewardship. And so this is, in the developed markets as well, resourcing is limited, I'd say rather low. In APAC as well, I think the resourcing is also very limited and an area to increase. One of the catalysts that can increase resourcing in stewardship is asset owners putting emphasis on this area to asset managers. When asset owners farm out their funds to external fund managers, one of the criteria can be to look at the stewardship resourcing of the asset managers, and then not just reporting the stewardship efforts of the asset managers, back to the asset owner on an annual basis, but actual discussions. How many meetings did you have with independent directors? What are the topics that you had with independent directors? I think asset owners can play a bigger role in pushing along asset managers if they make stewardship criteria not just something in the RFPs, but something that actually gets reviewed annually in a more detailed way. So I think stewardship codes can be strengthened to make outcomes more of the focus. And one of the aspects that is hardly ever mentioned in stewardship codes is meeting independent directors. Stewardship teams need to meet independent directors to understand how the board functions. That should, I think, be in most of the stewardship codes and stewardship principles in the region. And we also believe that collaborative engagement, given your limited resourcing that teams have in stewardship, one way to be more effective is to have joint meetings, and that is one of the things that ACGA provides to our members. If you'd like more information, this is our emails. I'm here together with my colleague who looks after Greater China, Lake Wang, and our reports are all available on the ACGA website. Thank you very much.
Thank you, Mr. Amargo.